All right, and we are back. We are back, and welcome to the David Carmena Show. I want to thank everyone to coming into this special episode for you. We're featuring the best and brightest mind in the banking and finance and personal finance. We are actually, guys. We're continuing the conversation from last week, and we're talking about the banking collapse and its potential ramifications. Today, let me set this up here. Struggle streaming, guys. Struggle streaming. Okay. So today we're going to continue that conversation, and we're going to bring up our esteemed panel of content creators. We're talking about the best of the best, guys. We're talking about AV to the seventh power. She's going to come in from a banking perspective and guys, legal matters. She's a great content creator. I'm gonna let her come up and introduce herself. We have Sim. Sim is going to be coming in from a personal finance and from the fire movement. I want to know more about this fire movement. I know he talked about it a little bit last time, and if you guys was able to look at the show from AV, you can tell that he didn't know much what he talked about. But we're gonna give him another chance. We're gonna give him another chance today to explain himself. So I'm looking very interested to talking to Sim Saya today to talk a little bit more about the fire movement. We have Perry Unlikely. Perry is all about crypto. He's going to talk more and more about what's going on with the crypto as it applies to banking and tightening of credit. Maybe there's a situation where we can use crypto in today's market. And then lastly, we're looking at Tim, the intentional millionaire. Guys, we have a bona fide millionaire in the room. He's going to talk more and more about what he's doing with respect to personal finance, how he's making, on the track to making millions or making more millions, and how the effect of the potential crunch in credit, how is that going to affect him with his portfolios. But first, as always, I'm going to bring up AV. AV!
Hi, David. I love that. I love the soundboard. It's so good to be here, brother. How are you doing?
I'm doing well. Hey, I want to thank you for coming on. AV, tell me a little bit about what you do, your channel, a little bit more about what's going on.
Yeah, absolutely. As a content creator, guys, my name is AV to the seventh power. In my past life, I spent 15 years in the banking industry. So I know a little bit about banking when it comes to communications, and how we have our executives communicate to the world. So, writing talking points for people that show up on MSNBC, CNN, and all of these spaces. Um, as we saw with SVB, it's so important on how you curate a message, because you can scare your investors if you're not careful. But what I do on my channel, I also go to law school part-time. I'm finishing that up, so I know a little bit or two about banking and the legal aspect of banking as well. So I'm super excited that David invited me here for this. I'm so pumped, and this panel is amazing. It's going to be great, and I'm so excited for tonight.
Yeah, AV. I don't know how you find time to do everything that you do. I mean, an excellent content creator, law school student, and all that banking experience. I mean, you cannot go wrong.
Yeah. 15 years. And that's the thing, like most of it for me was in communications, but sometimes you have to think about the legal aspect of that. Anything that we have these people say media wise gets looked at by lawyers. It gets approved by compliance. So sometimes I see things and I'm like, how did this happen? How do we allow a CEO to say X, Y, and Z on a shareholders meeting? Crazy.
Right. And, we're going to talk about the Chase Bank CEO and him, his recent statements. But first, I want to bring up You know, last time I had this conversation with Sim Sia. You know, it didn't go well for him, but I wanted to bring him back. I wanted, you know, when I got the game back together, I say, you know, I cannot miss out on the brother. Sim, introduce yourself to the chat, to the viewers, and a little bit more. Tell me something about that fire movement. I want to talk about that.
Man, listen. I am sincere, and listen. For most of my life, money has dominated me, right? Like my lack of understanding about money has dominated me, and so now it's my turn. It's my turn, right? It's my turn to be back at the top, right? And so my mission as a member of the fire community is for me to take control of my life, right? To get the money back in the places where it should be, you know, and that's really where I'm having an opportunity to curate what's going on with it. And so the fire community has helped me to understand how I can become financially independent and retire early. You know, there's some things that's been going on in the fire community in the recent days or the recent week. And so I'll talk about that in a little bit. But I'm interested to have this conversation. And I see y'all taking shots, man. You know, so David, I want to see what we can really what kind of discourse we can have today that allow us to be able to kind of speak from various different standpoints. And so I'm interested to have this conversation.
Absolutely. You know, I'm super interested in that fire movement and specifically how the bank crisis and tightening of credit, how it affects the movement. So I want to talk about that and see how it's going. But speaking about differences of opinion and kind of looking at it from a different point of view, I'm going to bring up Perry. Perry is an expert in crypto, and I really want to know is crypto a safe haven now that the banks are potentially tightening credit? Is crypto a avenue for us to go to? But first, Perry, could you introduce yourself and your channel?
Yes, absolutely. So I'm Perry Unlikely is my channel. I actually do a little bit of everything when it comes to investing. Certainly crypto is my main purpose on the web right here. But as far as YouTube's concerned, but I also invest in real estate, supply chain professional for years. So heavy into supply chain, which that's something I'll speak to later. There's definitely a supply chain. There will be side effects to supply chains that people haven't thought about from the whole banking thing as well. And also have a real estate license. So I just do a little bit of everything, but always focused on just investing, and just excited to be here and really enjoy these conversations. I think they're real important.
Perry, thank you so much for being able to come on to the panel. I know that we had on AV's station, we had a great time.
Absolutely.
And I'm so glad that you're able to come on and talk about what's going on with the banking crisis from an potentially alternative source of income.
Absolutely.
And last but not least, we have the millionaire. The millionaire's on board. The intentional millionaire. We got you on mute, man.
All right, let's see how we're doing. Hi, everyone. How is it going?
Hey, welcome,
Great,
Tim.
Great.
Mm-hmm.
So
introduce yourself and what do you think about what's going on with the banking?
Well, first thing is my name is Tim, also known as the Intentional Millionaire, and I have a channel. And what we talk about is we coach, mentor, and teach individuals how you could build your $1 million plus portfolio. And in the process, we talk about things on how you can, the two areas that we struggle in. And the one is you have to believe it's for you. You have to believe that you can do better. And then the second thing is you have to execute. So those are the two things that we talk about on the channel. But when it comes to SVB Bank, I think it's a peculiar situation because, and we'll get into it, but I think that the government had to step in, because if they didn't, we can look at the Great Depression all over again. So I think when we dive deeper into this conversation, we're going to see that if the banking system fails, the economy fails.
Right.
So I think that right now, SVB is, I think it's a great case study. And why is that? Because now allow us to really take a snapshot on what we're doing financially.
Right. And we're going to ask AV to kind of get us up to date on what's going on with the banking industry right now. But first, I want to acknowledge some of the chat we have. Loretta's just saying, hey guys.
Hi, Loretta.
Loretta is I just received the notification. Okay, so she got the notification. She came on in. We have GTM. The 5 movement is hot. All right. All right. So we're going to learn more about that. We have Wealth Talks Production, and salute Tim. Salute. You got your man here. GTM comes back with the fire emoji. We have another salute, Wealth Talks Production. We have the Intentional Millionaire saluting to the chat. Go ahead, man. Wealth Talk Productions. Tim is being a minute. What's going on with that, man?
He's been in Australia. He just got back to the state. Are you back in the States, Tim?
Yeah, I'm back at home.
Wow, look at that. You see the setup in the back. Like, it's good to have you back. We missed you on the last one. So good to have you tonight.
So, Tim,
Yes,
how long you been back in the States?
I've been back now for a week because I had to come back early because I had to attend a funeral. So,
oh, I'm sorry to hear that. You know, I think that my condolences, but I'm glad that you were able to make it back on the panel.
Absolutely. We're going to turn up.
Absolutely. And speaking about turning up, Christopher Williams, as Lead would say, no comment, just the just the love of the game. AV, what is Lee saying? What is Lee saying on it?
No comment, no question, just a pure love of the game. Shout out to CW.
Shout out.
All right. Thank you, brother. Thank you. Christopher Williams with the $9.99 super chat. We have another Christopher Williams.
Nice.
Shout out to CW.
CW with the $4.99 again. AV, what does Lead say?
No comment, no question, just a pure love of the game.
Love of the game. Thank you, brother. Thank you.
CW the sponsor of today's stream so far.
Right.
Yes, he is. We're going to put him in the chat. But while I'm doing that, AV, catch us up with the where we are with the current banking situation.
Yeah. So for those of you guys that have tuned in to my stream last time, we did that on that side. Luckily tonight we're doing it here on David Carmena's side. We talked about the SVB Bank failure. What does that mean? We talked about the Silicon Valley Bank failure. So this happened at the beginning of March, and it was a tumultuous situation. A lot of us have agreed that the cause of it could be due to leadership making some decisions that just didn't really make sense. The beauty about this panel is that you have people from all walks of life in the finance industry, right? So we were able to last time talk about, go to Perry and talk about the impact on crypto. Go to Sim and talk about the impact on personal accounts. SquareBiz, who's not with us tonight, was able to talk about the impact on business accounts. David was able to talk to us about politics and how immediately a lot of this was due to the Fed increasing rates. This bank, and I have friends that have been competing with SVB Bank. They've been at the other banks, and in March was a very busy month for them because they had to clean a lot of this up. Because what happens is if there's a CEO that talks to shareholders, and around this time of year in Q1, Q2, a lot of companies have something that's called a shareholders meeting, where you have to report to the people that have stocks with you, and you have to basically tell everybody, what is the status of your organization? How's everything looking? What are you guys planning to do next year? What was the report like last year? How am I getting paid by investing and being an investor in your company? right? So the way that this happened was they had a shareholders meeting at the start of this year, and the CEO mentioned that they needed to get more money from lending. The question became, why? So all of these sophisticated investors were like, Silicon Valley Bank, why do you need more money? And then they started digging into it. And there's something called a bank run, where when investors start freaking out and they take their money and leave, regular day-to-day customers start to leave, right? So this bank lost a tremendous amount of deposits in the span of 24 hours after this meeting, right? The issue with that from a legal standpoint, and what we talked about on my side, is we talked a little bit about the FDIC. Tim came in, and I wish you were there, brother, but he also talked about another thing we didn't include in that conversation, which was insurance on the investment side, right? There's federal regulations where money is insured by the government per a certain amount, right? And I think, Sim, we got into a little bit of a debate there on the 250, right? Like, is all the money there? Is everybody have 250 in America? Like, we talked about all of that, but it's just, that's just to give you guys a synopsis of a continuance of that conversation, because that was 2 weeks ago. What did we say leaving that? I asked everybody on the panel, is your money safe in the bank? Maybe we can continue that tonight and see what the answer is going to be. It might be different.
Yeah, I definitely want to see, Sim's opinion on, is that money safe? Is that money safe? Sim, the last week, like as AV mentioned on the channel, it took some convincing, and maybe we didn't convince you that the money is safe up to $250,000. What do you think about that now?
Well, it just depends on how fast you can get to the bank, So I mean, but all jokes aside, the money is safe theoretically. That's assuming that there's not a whole bunch of people converging to the banks in order to withdraw. So I don't believe that there's any particular reason for anyone to withdraw their funds, because then they would have to ask themselves where they're going to take the money to, right? There's a theory, especially in the FIRE community, where we speak about, time in the market is better than timing the market, So that theory just essentially says, rather than waiting for you to see the bottom of the market, you'd be better off just dollar cost averaging, and that's buying into the marketplace incrementally at whatever given value that it's at that point in time. So, it's hard to tell. And even in 2008, and maybe you can speak to it and Tim can speak to it, about how can you really identify the bottom, because now I'm watching, and one of the sticking points that I had towards you and some of the other real estate investors was that during the 2020 pandemic, and when everything was not looking so secure, a lot of people were running up the bag, as they say, as far as the home prices, and everyone was taking advantage of it that was able to play. But now it seems like there's a polar opposite. Now there are people who are defaulting on their loans, or not able to stay in their positions as much as they did before, maybe because they bought into the home without no contingencies and sight unseen, no inspections and what have you. So considering all those factors, there are people who might not be in the best potential position right now. And now the tone is completely changed. I'm seeing now investors going out there marketing and creating opportunities for people to get out of bad situations. So we'll see. For me, it's more so about just greed in general, and speaking from the standpoint of the consumer, right? And when you see people who are doing the Birdman hand rub, and they're anticipating all the money that they can make as a result of other people's misfortunes, it kind of makes you think. It's like, how much is the opportunity for you to make money really moving you? And are you willing to do it at the cost of someone else suffering? That's my main question.
Tim, what do you think about that? Is it safe?
Yes, the money is safe, but the money is only safe as long as we don't do a bank run. because one of the things that y'all talked about on the last stream was Sim gave a scenario if we did a bank run, and I think everybody other than Sim stated that the federal government can back that. Well, when you really dive deeper, that's not necessarily true, because when you think about how a bank operate, you put in $1, they loan out $10. So the reality is, and then they don't have a lot of cash most of the time. So the reason why the government stepped in for SVB is to basically calm the population so a bank run doesn't happen, because they know they don't have enough resources to sustain a banking system if that were to happen. So that's why they even went over the limits and started paying people out, because they wanted to protect the reaction of the consumer. So as long as we don't have a bank run, yes, most people are covered. If a bank run happened, you better worry. I'm gonna tell you that right now. And you can even think about how insurance companies work. So insurance companies normally don't have a lot of cash reserves, because they just basically taking $1 and they flipping it into other areas of the financial markets. So I think that unless we have a bank run, we should worry. But outside of that, for most people, especially if you have under 250,000 in your in your checking savings account, or any type of service that you get from your local bank, you really don't have to worry. But I think the bigger issue is, and this kind of touch on what Sim just stated, the bigger issue is people are looking at the media, and the media creating fear, which cause reactions. So I think the bigger issue is when you start to read this stuff, you have to dive deeper, because even if you look at the history of SVB, and I'm gonna kind of leave it as that, before the current CEO, the CEO prior to that, they had issues, and he resigned was because it was some issues with them spying on some of their customers. So, when you think about SVB as a whole, they already had some internal issues prior to this ever happening. But also you got to think about their biggest consumers was people in the venture capital space. So that's more advanced. That's what you call derivative type investments. And so with that being said, the average consumer normally don't even have access to those type of investments. So
okay, so for normal people, you're thinking that it's safe, but for businesses, it's not?
even for businesses, I think they're safe.
Perry,
Because
is crypto the new safe haven?
the only time the business should worry is when the bank run, because the average consumer is what helps supports the system as a whole. It's not the big businesses, it's the average consumer. So it's
Awesome.
kind of like, you think of it like a pyramid or a hierarchy.
Right.
It's the ground floor is what creates the foundation for the banking system. That's which is you consider your average consumer under 250,000, because it's more of them than it is people that has massive accounts. So if they was to do the bank run at the bottom level, then that's going to cause everything at the top to fall through. The difference here was with SVB, the reason why they had to do this was because at the top level, and this is a top level type of bank. So at the top level, they did like if everybody was doing all the standard banks around us. And when I say standard, meaning they don't deal with more your special type investments, your advanced type investments.
Okay. Okay. All right. Perry, is crypto the next is a safe haven?
So that's it's tricky. Here's why. So it can be, certainly for those the more skilled people, yes, because they're going to be more so trading or knowing, even if it's just kind of swing trading, not necessarily day trading, knowing when to kind of move in and out of it, because you can move in and out of it quickly. But the big thing is the stock market. Crypto has never been able to fully get away from the stock market. So as the stock market goes, crypto does. But the one piece that somewhat changes that is the dollar index. So the DXY. So there's a direct correlation to our dollar index, and when it drops, crypto goes up. When it goes up, crypto goes down. It's like clockwork. The charts are literally inverse of each other. So actually, when you talk about are the banks safe, to me, the banks are safe. But I think the real question is the threat of what will the money be worth down the line if we don't fix this issue? Because at this point, it's like, different nations are teaming up against the dollar, which is causing issues. And really, for right now, it's the worst time. It's just the worst time for America for this to happen, whether it's, China, Russia. So it's all those things at one time. So as far as the money being safe, it's safe, but also all this money printing we did during the pandemic and all those things, SVB, all of it coming together at a head the same time when these other nations are coming against the dollar. It's not the best time. So to your point, crypto can be a safe haven, but for me, it's still about those who are skilled enough to know what to do with it. Now, crypto was created, right? Bitcoin, and that's what people always say. Crypto was created for times like this. No, Bitcoin was. There's 20,000 other tokens, 90% of them are trash. They were created to make money off of, period. It has nothing to do with a safe haven, right? So yeah, Bitcoin's a different story, but it's still as the stock market goes. So the way that I try to tell people to approach it is, if you're not really into crypto, you look and you see if there's a big drop and things really go down, that's the time to capitalize on it. But just to get in and say, hey, we're good. If you're going to do that, give yourself 5 years and you'll be fine either way. But if you're looking for a shorter term gain, which most people are, they had a study today. I think it showed 31% of people are skipping a meal to pay their mortgage.
Wow.
And for me, it blows my mind because I'm like, skipping a meal ain't going, skipping a meal is not going to do much for me. And, in terms of a mortgage, that's in my opinion. But, so that's just where we're at right now. So really rough times, but I just think it depends on how you play it. And you got to play it more so long term if you don't have that skill built up as far as crypto is concerned.
AV, what does the bank think about crypto? Do they feel it is a threat for, as an alternative currency?
It's not that it's a threat. I think that a lot of banks, at least some of the big organizations that I've worked for, and I've worked for 2 out of the big 5, in 2018, they started researching. They wanted to learn to see if it was a threat. So also understanding, hey, how does crypto work? And in one of the banks that I worked for, they had a demographic in 23 countries internationally. So they really wanted to see in consumer wise, right? So they wanted to see, hey, how does the everyday consumer use money with the evolution of technology? How is that going to change over time? How do we really start defining who our customer is and looking at how lucrative that customer is going to be in 5 to 10 years? People don't really think about it like that. Banks are starting to get smart with technology. There's things with your phone. You know how we have the GPS thing with your phone? You can walk past the bank. And now, because you have GPS enabled, we can send you the same type of marketing that you get online. Like, banks are starting to get very, very granular with technology. When crypto hit the scene, at least from what I've seen from a communication standpoint, to arm our executives to go out there and talk about this stuff, because this is the type of thing that, I would do in my day-to-day job. Like, hey, if someone were to ask you on CNN if crypto is a threat, what would you say? We would actually write what that person was going to say. I think a lot of it, so this is going to sound a little cliche, right? Like, this is going to sound like, oh, you're giving us the corporate answer. But really what the answer is banks wanted to understand it. There's a lot of talk in the news right now about digital currency becoming the new world currency. That's a bigger conversation on so many levels. That I don't think we have time to cover today.
No, not
Let me
not
just
today. But there's been a lot of the the bank presidents, the CEOs coming out and saying that uh, trying to steady the market, I guess is best. Yeah, the CEO from Chase Bank, he said recently that we have some short-term pain. I'm paraphrasing, of course, but long-term, we have a very stable solution, banking solution. And on the other side of that, the Kevin O'Leary came out and said that in 24 months, there's not going to be no community banks. So you have two extremes there. AV, do you think that that's something the downfall community bank is really going to happen?
No, people love community banks too much. That's the thing. When you have the market, right, you're still gonna have buyer preference. Some of us tend to go towards national banks because, like, let's say if I just have money everywhere like Tim, I might want to do business with people in other states. So I might choose a national bank for that reason. But if I'm the day-to-day consumer that doesn't have large business needs, mid-scale business needs, or even, like I would argue, like if you're a mom and pop shop and if you have a burrito shop or something, you may not need large banks, right? You might want the community bank. Community banks do have better rates. They tend to offer customers a little bit more for the consumer side. The issue is all of these banks, whether community or large, when the Fed impacts the rates, everybody gets impacted by that, right? But I do think that community banks are still competitive. They really are. Because do you guys remember back in 2008, the financial crisis happened? I remember being a teller and I was like 18, 19, right out of high school, having to tell people, they would come, construction workers, people from all walks of life. Do y'all remember when cashing a check was a thing? Like cashing your paycheck was a thing.
Mhm.
I remember having to be the person to tell the person, the customer on the other side of the desk, hey, we need your fingerprint. That was already a big deal because people are like, for what? Like dip your finger in this thing and put it on this check. People hated it, right? But like, they already thought that was weird. Then we had to tell them, oh yeah, and it's going to cost you $6 to cash your check. I literally practice this in my mind every day and had to talk to hundreds of people every day. Thumbprint is one thing, but now I need your thumbprint and tell you that it's going to cost $6. To someone that has money, it's not a big deal. But for the everyday person, I can't tell you how many faces I got from all different races. It did not matter. People were like, for what? Why is it $6? And like, back then banks didn't have fees, but at the time, I think I was at BOA and they were one of the first big, 1 out of 5 or big 5 banks to roll it out. So, that was a little crazy.
AV,
Yep.
AV, how about that $4,000 check? Hey, we can give you 400, but we're gonna have to hold the rest. You talk about getting hot.
Right. And then, oh yeah, it's going to take 6 business days for this to clear. You want to piss people off? Make an 18-year-old tell your customers that. That was so like traumatizing for me being in the banking industry. But like those holds were tough.
Yeah.
And then, because even as a person that's hearing it, if I'm a customer and I'm like, I need this to clear tomorrow. And they're like, oh yeah, it's going to take like 2 days. Dude, I need my money. Your job is to hold my money. Your job is to give me my money. Your job is to transact my money. Why are you making it difficult? So that's why a lot of people tend to like community banks because their regulations are a little less nuanced, at least for consumer practices. So that's just something I wanted to mention.
Yeah, and let's face it, in 2 days or 3 days, that money is deposited into. They have access to that money.
Yeah. Let me
you're waiting another month to get $3,000. That's
right. It's funny you say that. The reason I stopped banking with BOA, and maybe I overshot it. I don't know, but I sold a car, right? I needed the money to get the other one. And they're just like, it might be a week. I'm like, I got someone waiting on me. I got a deal on this other one. I need this money from this one. I was like, I would have never even put it in the bank if that was the case. And it was just this long, but really it was that specific teller said, we're BOA, we can do what we want. And I lost it. I completely lost it. So, some of that, but even in that case, right? I mean, it wasn't life or death, but some people literally are like, how am I going to pay bills with it? So I can definitely understand where, where that's difficult. And the bank has it, right? I mean, it's like, look, just throw them digits up on that screen and give me that cash.
Right. And I'm wondering, how many people on the panel do we still bank at a community bank? Do we bank at one of the big five, or is there a combination? What do you guys take on that?
I think most people, I think go back to what AV mentioned. I think most people do the community bank if they pretty much stay in their geographic area. But then I think also people consider the bank, and then you got to think about the credit union, because the credit union has different guidelines because they actually supported and started through just the community as a whole. So because of that, I think more people go to the credit union because they feel like the credit union is a little bit more friendly. They can get a little bit more better. They can get better rates on some products, not others. And then the community bank sometimes have a little bit more leniency when it comes to borrowing money. So I think it just really depends, but I think that really applies to the person that's staying in their geographic area. But then when you talk about, like AV mentioned, when you talk about, going national, different states, things like that, I think they go with a variety, because normally when you do a national stuff like that, you look at a variety because each individual bank you're picking for certain purposes.
Right. And it's something about you going into a bank and they know your name, they know your history. They give you that white glove treatment. You go into one of these big guys, and at least at the little deposits that I have, man, you're just another number. You're just another client. You go into one of these smaller banks and you have some money in the bank, man. They're pulling up a coffee and they want to chat and see how your family's doing, your dog is doing. They give you all that personalized treatment.
I use both. One reason is the credit union, I get dividends. I'm not saying it's major, but I usually get a check for, $300 to $500 back each year. And it's always a surprise to me. I always forget. So I'm like, oh, nice. But what I do, part of it is because my business is right, because I already have them set up. I'm like, I don't want to switch from the major banks just because it's already there. But what I do, I like to keep my checking, although I have a checking in both. I like to get my loans through the credit union. And then I do my actual banking through like a bigger bank, just because they're everywhere. And it's just really convenient. Although a lot has changed since I really started doing it that way. A lot of these smaller ones now have kind of teamed up, so you can use ATMs, but I'm not trying to go around, I don't even use ATM anymore much. So not even that matters anymore. But I really do my actual loans and stuff through the credit union, and then bank through a large bank, just because I know they're coast to coast or whatever. And even overseas when I travel to Europe or wherever and stuff like that.
Yeah. So
you just getting back from Australia. What's the banking look like over there? Did you do any banking, or what was access to capital?
Actually, I didn't do much banking there because most of their stuff is tap to pay. Because they really made a major change after COVID. Because believe it or not, when I first went out back in November, they was actually just coming out of a lot of the COVID restrictions. So a lot of their stuff is tap to pay. They would prefer for you to tap to pay, so you ain't really got to touch anything. It's really easy. It was more people paying with their phone than anything. So they was using a lot of the digital apps, and that's what I use.
Awesome.
And for me, I use my American Express because for me, I like the security of me being in a foreign country, and if anything goes south, or something goes wrong, or I get a charge that wasn't me, it's easier just to call them up and they'll handle it, versus if you do it with your bank or credit union, you're gonna have a whole lot of headache. You gotta wait. It's just like you deposited a check. Oh, we'll get to that later.
Yeah, American Express, they don't play. American Express does not play. They get that money back with the quickness.
Yeah, they absolutely do.
Yeah, that's the benefit of American Express compared to using your debit card or your bank card for sure. I concur with Tim is saying, and I personally have a credit union. I have a credit union from the standpoint of a community bank, and I also have a national credit union that I deal with. So that's the bulk of the way I do transactions. But just like Perry said, I do my loans through the credit union, and I do some of my banking, a good portion of my banking through the national credit union as well. Salute.
Hey guys, the chat is getting active here. The chat is getting active. But Christopher Williams, thank you, brother. Thank you. With another $4.99 adding to his total. But I don't know, man. I don't know. We got some ballers in the house. They're coming up. Christopher, thank you so much. I appreciate you. Beautiful eyes, Hey, brother. Thank you. Salute. I'm late. I'm just showing some love. Hey, AV, and salute to the mastermind. Salute, brother. Salute. With the $20 cash. Actually, the $20 super chat. Thank you. And thank you for supporting the mastermind. We are all hardworking content creators here, and we really, really, really appreciate you. And AV, you got anything to say to Mr. Beautiful Lives?
Oh my gosh, y'all need to type El Guapo in this chat. I know I'm not supposed to use my soundboard when I'm a guest.
Go ahead, use it.
Listen. Y'all need to type El Guapo in the chat right now. El Guapo is Beautiful Lives. Amazing content creator. Has been doing his thing for the last few weeks. And if you guys are not following him, I don't know if you've been living under a rock or what you've been doing, but this man has grown so significantly. A new dad and also a military vet. He covers so much content on his channel. And if you're a man, especially, please watch El Guapo. But David, I think you got another super chat to cover.
I was bringing it up.
I think you got another super chat to cover. Okay.
You showed up big time. We got a new stream sponsor for sure. Go ahead, AV. Nice. Do the honors.
Listen, y'all need to type El Guapo in the chat right now. It's not even like we're not even gonna finish this stream.
El Guapo.
El Guapo.
We're not even gonna do it. You guys have to all type it in right now.
El Guapo and Little Guapo.
There we go. We look at the chat. Look at the chat light up. Let's type that in. Got them both going. El Guapo said, I keep my money in a combination of Crown roll bags, British shoeboxes, and I'm not doing something wrong. I don't know, man. I'm going to let AV talk to that. Put me in the banner, por favor, obligato. Yeah, absolutely.
He keeps them in them BK diamond cells.
AV, what about that Crown Wall bag? Is that the downfall for the banking industry? Is that another crypto?
We're not going to talk about it tonight. We're not going to talk about it tonight. But I just love how you butchered the word obrigado. What did you say? Habla gato.
Hey, listen.
It's time to go. Like we're leaving that word.
I was in Italy, and you can tell me, my Spanish and anything other than English, man. I butcher it all. I
love it. Well, listen, El Guapo, that was super generous of you. This is a
very nice salute.
Yeah, huge collab for us, especially being masterminders. It is great to bring all the finance people in one space and to be able to talk about this type of stuff. So to see that support is huge. And, El Guapo in the mastermind is one of the biggest content creators that we have in there. So this is a huge level of respect, brother. So salute to you. We are all super excited that you're here.
Salute. And you are now the new stream sponsor.
Look at that.
Salute. I'll update you here in a second. But first, let's get back to a couple of things here. I want to know, with respect to the banking industry. You know, the credit situation, a lot of the big talking heads and CEOs of the bank saying that there's going to be a crunch. There's going to be a crunch in credit. They're not going to be as liberal lending policies. AV, do you see that's happening?
Kind of. I think that with risks, every bank has. Oh, y'all done triggered Christopher Williams.
I just saw it.
I'm not even gonna. Christopher Williams, you poked a bear. Oh, here we go. Here he goes. El Guapo.
They're trying to dethrone you, El Guapo.
This is what happens. Listen, I'm telling you guys, I've seen this happen in so many of my streams. Somebody outbids Christopher Williams, and I'm like, stop! Don't mess with Christopher.
Don't mess with him.
But look at El Guapo with the eyes. He's like, hold on. I forgot my thought. But what I will mention is just in the aspect of banking, there's so much movement with technology. You know, we went back to 2008 when there was high CD rates and, you know, all of these things. And then people started getting upset with a lot of fees and things of the like. But what also started to happen was a wave of technology. Like, look at this. We can send each other cash apps right now, guys. You know, like 10 years ago, you weren't able to send money through your phone, right? I remember when banks were freaking out over Zelle, right? When Zelle was coming out, they're just like, oh my gosh, there's this new platform where you could send money same day, right? Because before that, it was wire transfers. You could still send wires today. But you know what started to happen with wires? Fraud. You know, like fraud was able to happen. All these small little features that instantly change the game. Like now you can put a freeze on your debit card through the mobile banking app. And for bankers, we get excited about this stuff. We're like, oh, this is great. But for the regular consumer, you're like, why didn't y'all do that 10 years ago? You know, what is this? Or, you know, you could go to, I think Chase does this. You could just tap your phone and withdraw money like that. You don't even need a card anymore. So now that we're seeing how consumers operate in the ease of technology, a lot of technology companies are starting to do deals with banks to actually do business together, right? But I went a little bit down a rabbit hole as far as risk with lending. Risk with lending means when rates go up, it's, oh, sorry, you got a war. They're going after.
I haven't even finished updating the stream sponsor for
you gotta type faster, David. Faster, type faster.
I got it. Oh, guys, hold up. We gotta stop. And thank El Guapo and Christopher Williams. I mean, look, guys, what you guys are doing, it's hard to say how
we got to get the African fan with.
Yeah, we got to get the fan out. It's hard to say how important and how blessed we feel as content creators, because that's how you validate what we're doing. You know, night in and night out, we go out and we put in and we put the best content out that we feel that we possibly can. But the validation comes from what you guys are doing now. Thank you. I'm anybody else want to pop in, that's fine. But I really, we as content creators collectively really appreciate what you're doing. And you just don't know. You just don't know how we feel about that. Thank you so much.
Yeah, that's huge. Shout out to Christopher Williams and El Guapo. You know, Christopher Williams is huge supporter of me and the lead attorney. So, you know, so many content creators in the space. He's always there supporting folks. Like there will be days where you'll put stuff out and Chris will just put like little fire emojis under whatever you posted just to show you he's there, just to show you he's supporting. You know, so it's people like that. But man, El Guapo is showing out tonight, Chris. I don't know. El Guapo's here.
I'm gonna have to update the stream sponsor. I mean, you know, just that quick.
Yeah. It's amazing. It's amazing. Oh, okay. It looks like Chris CW's fold. He said he's gonna let you take it tonight, El Guapo. Look at that. Look at that. And that's the other thing that I love about the men in the community. You know, when it's an equal, you know, draw, they'll let you know when somebody's tapping out. So that is amazing. So shout out to you guys. Look at that. Look at that.
Can I give a shout out to El Guapo, because you're a Street Fighter fan and you like Ken. Ken is my character too. Here you go.
Perfect.
Listen, we got
I had to get a payday loan for this one. Thank you. We really appreciate your support. And look at this. Look at Carrot Juice. Carrot Juice coming in with the $19.99. You said Carrot Juice podcast said, I think the old school method of living within your means and investing in a diversified manner is the best way to ensure that you are financially healthy. Thanks for providing this useful info in these dire times. And so cheers. Sim, that's right up your alley, right?
Great that Andrew is talking. I think it's
He's speaking my language right there. You know, I mean, diversified portfolio. That's what we talk about in the FI community. Investing in ETFs, low cost, low expense ratio index funds, and really just putting yourself in position to invest in the entire marketplace overall, not just like the winners by themselves, but investing in both the winners and losers. And as the U.S. economy has been doing, majority of the economy are winners. And so if you mix those two together, you're likely to really come out on the top. So salute the Carrot Juice podcast for really giving y'all information, like along the lines of what we talk about in the FI community, investing in a diversified portfolio overall and not being concerned with the winners, trying to find the bottom and everything like that. Having an elementary level conversation initially about understanding investing, and then eventually moving on to a graduated or college level conversation.
What is the expected yield that someone can expect with that strategy annual?
So we recommend in the community, we recommend index funds that reflect VTSAX, which is the Vanguard Total Stock Market. On average, you can say probably over the life of the fund, it's returned maybe anywhere between 8 and 10%. But I would say your expectations should be along the lines of 8, could be as low as 5, and as high as maybe 11. That's what I would say. But it's also important to understand that you shouldn't be looking at it over a short time span. You should be looking at it over the course of 1 year. If you look at it over the course of 1 year, it's not really practical. 5 years is not really practical. Anything over and above 5 years gives you a good idea of how the fund overall has been performing. But VTI, VOO, and anything that mirrors an index and that has like a low fractional expense ratio. But salute the beautiful lies, man. That payday loan's coming through. That man's driving around town getting that money.
Well, first we got the lead checking in. The lead is checking in, but lead with the 101 trying to the lead is trying to steal he's trying to steal the stream sponsor with that $1 101 lead. Thank you. Lee say, man, I'm gonna need some checks. Oh, Lee, need some cheeks. What's up with that lead? I don't know, man. I don't know. Thank you, brother. Thank you. The lead is the mastermind sponsor. Well, actually, he's not the stream sponsor, but he has a mastermind course that is second to none. We are all part of his mastermind group. He is a content creator extraordinaire. I look up to him and follow him. I think that we all take our cues from Lead and his ability to help YouTubers become monetized and become a much larger channel. And guys, he has two courses, one advanced and one beginner's course on how to build your YouTube channel, how to become a professional YouTube, and basically how to get out the game. You know, a lot of us are in the YouTube game, but at some point we're going to exit the game. And so you need that soft landing, and the Lead is helping us with that. And so, Lead, thank you. AV, you have anything to add on the lead?
Listen, I got the fan. I'm pulling out the African fan for this. He's talking about cheeks.
Well, I went to you. I didn't go to any of the fellas. We ain't showing no cheeks.
Oh, did you do that on purpose? Really? Really? You did that because I'm the only female on the panel?
We ain't showing no. I think Tim might show some biceps or something like that, but we ain't showing no cheeks.
Tim, I'm gonna need you to pull one out, Tim. Like pull out a bicep.
Oh,
no! Listen, that's heat. But listen, this is also just super encouraging at the same time, guys. Like we're talking about a super dry topic tonight, which is finance, right? Which is SVB, which is banking. Like, that's not like super entertaining and all of that stuff. But I see Tim dying. I'm not even gonna look at the chat. But at the same time, it's one of those things when y'all are here encouraging us to continue the conversation, and we can't even get through the conversation because there's a super chat war. That's super encouraging to all of us. And huge shout out to David who put this thing together. He wanted to do a part 2, and getting all of us together to do it. Oh my God!
But look at this. Look what he is saying. Beautiful El Guapo. Oh man. Oh, he says that Christopher Williams, you got this, pimp. Thank you for being such a great supporter of all of us. Please tack all of these on Christopher Williams and make him a sponsor. P.S. I had to take you had to take a loan out for this. We had to take a title loan for this one. All right, man. Thank you. I mean, we're gonna tack it all to Christopher Williams, but El Guapo, salute, man. You are really coming in big. You're coming in strong. I appreciate you. Next time we see you in the mastermind, I don't know. I'm gonna have to talk to AV and see if we can get a special fan or something for you, brother. Thank you. I know that the rest of the panel wants to thank you for your generosity. I'll give them a chance to do so. Oh,
Perfect.
Yeah, salute to Christopher Williams. Salute to Beautiful Lies. It's a beautiful thing when you can see two brothers who are interested in supporting content creators and just really seeing the vision that they really see in us, and it's just really amazing. This is a conversation that's relatively dry. It's not the most exciting, and I could say now is probably the most important time for really the people to hunker down and really get it figured out how they want to go ahead and manage their finances from here going forward. But salute to Beautiful Lies and Christopher Williams. We see all the support that you are contributing towards the stream. Salute to the lead attorney and everyone else that's really contributing towards this conversation.
Yeah, the lead tried to steal it. He tried to come in with the 101. Shout out to the lead coming in at the 101, trying to get a little bit. I hear you, man. I hear you. We have Lisa the housewife super sticker. Thank you for the $1.99. I appreciate you, man. I appreciate you, Lisa. Thank you so much. But she came back. With another $1.99 super sticker. It says, "Greetings, AV. You want to say hey to Lisa?"
Hi, Lisa. Lisa's also part of the Wives Club, the Kevin Samuels Wives Club, which I'm also a panel member on. Also, shout out to Lisa for coming through and supporting tonight. Thank you, Lisa.
And we have, of course, Beautiful Lies. El Guapo said, "Oh, hell, Lead is jumping in. That ain't fair with all his rich behind." Lee got all the money. Lee coming in at the 101 trying to steal it. Go ahead, Lee.
Where's that banner, David? Who's in the banner? Who's in the lead?
I have to, you know what? I got to pull them up. They keep coming in. I don't have time to fill it in, but I'm going to let you guys go, and then we're going to see who's the lead. But first, we have Friendsgiving. She checks in with the $50, but no, there's more. She comes in with another 50. Awesome. Thank you for supporting. I know that You probably came in at the end, looks like, and we're talking about the banking and the banking crisis, access to capital. We're discussing opportunities and outcomes from what's going on currently, but your support to what we're doing, we really appreciate you. AV, what do you think about Friendsgiving?
Oh, hold on, listen. This is our first female donor that is like dropping some bread tonight. So I think, honestly, I need you guys to type in Friendsgiving. Oh, I think y'all really, at this point, have to type Friendsgiving into the chat because she just dropped
came
another
in with
one.
And another.
Salute to Friendsgiving.
Like,
she wanted to come in first. She wanted to get over what the league came in at with the 101. She wants to top that. She wants to show that women empowerment. Go ahead.
Listen, Friendsgiving is such a sweetheart. I remember, I remember at one of my streams, not even a stream, it was a day I was not even on YouTube. I think it was my birthday. She sent me a Cash App on my birthday. And I was just like, she is such a sweetheart. And she's always supporting so many content creators in this space. And I don't think that we give her the flowers that she deserves for supporting so many people, big, small, whatever the size, she's always there, so, whenever we see Friendsgiving in the chat, I'm like, hold on, you guys need to type that into the chat, but we also need to take a moment to acknowledge that there's also women out here empowering so many content creators. I don't even want to know what's going on. I just look at Tim laughing. I'm like, oh, hell no. What's going on in the chat?
Absolutely. Let's everyone in the chat type in Friendsgiving. Let's type her in. And thank you for supporting us. Thank you so much. Friends, let's get Friendsgiving in the chat. Please type her in. 1 second. Let me get her typed in right now.
We got to give David a minute to catch up here.
I have to catch up here.
She just put another one.
Oh,
your stream sponsor is a woman. Yes.
Oh, she came in.
She beat up Guapo.
Oh, I think she has it. AV, I think she has it.
She does. You need to put the banner on right now.
Let's go, Friendsgiving.
Yeah,
I'm right now.
AV, take over. Let me update this banner.
Yeah, I got you. Listen, co-host duties ignite. I'm here.
Let's go.
But this is huge, guys. And there are times even me, sometimes I drop super chats and people do not acknowledge it. And for something like this, a woman is sponsoring this stream.
Yep.
There are 5 faces on this screen, and a woman is sponsoring this stream, and that's huge in this space. So, Friendsgiving, thank you. We hope that you are doing well. Thank you so much for all the support that you give so many of us. But like I said, guys, for a dry topic like this, it's hard to make it entertaining. It's super hard to make it entertaining. So when you bless people like this, it's huge. It is huge, but this is also, I don't know, David, have you ever had this many amount of people on your panel?
I have one time when the lead was I was doing kind of a reaction to the Shanquilla stuff. Mm-hmm. We had a lot of interest, but the generosity is beyond what I ever expected. I mean, it's just unreal. And I want to thank everyone who is, large and small, but to have Friendsgiving so generous and being the female supporting us is I tell you, it is moving. It is really moving. It is really moving. I'm going to update the stream sponsor. I'm in the middle of doing that, but I want to put to the panel that with going back to the crisis the banking crisis and the access to capital. For the average person, that let's say the person that is the mom and pop, I want to give a couple of scenarios where the mom and pop, they're renting and they want to buy a property. They want to buy a home. And the business person who is looking for capital to expand their business. What are the opportunities other than accepting the interest rate, or are there other opportunities that someone out there can use to in the short term to overcome the tightening of credit? What do you guys think about that?
Well, I think one thing they can do is they can do owner financing. Where they can come, the owner of the property, they can take ownership of the property, and then they can finance it through the actual owner. They just got to ask. So that's one thing that they can do. Another thing that they can do is make sure they pay attention to the requirements. Because when credit gets tight, that means the requirements can get strict. So they got to make sure they keep the credit good. They have to make sure they don't have a lot of overhead and debt. Make sure they pay off credit cards. Make sure they pay off car loans as possible. But the key thing with a car loan is you got to make sure the payment is not high. Because the payment is going to dictate how much they're going to loan you, because they're going to look at your total snapshot of all your consumer debt to dictate, can you afford the actual payment? And then I think you got to have a little bit more down payment capital, because I think still money going to talk. It's going to get to a point where now your actual cash is going to do more of the talking. When you can't secure as much credit as you want to. But then another thing is, I still believe that, individuals got to find a way to generate additional income, because if they can generate additional income, that's another avenue they can use to secure credit. So you think about somebody that only work a 9 to 5 and somebody come in and work a 9 to 5, they also has a small business, or they make money part-time doing something else that's on a legal business infrastructure, business entity. If you was the bank, who would you loan to? Probably the person that got two sources of income versus one source. So I just think that's a couple things.
Yeah,
Awesome. The FIRE movement, is there, I'm wondering if there's an individual or a organization that you guys are normally doing, or do you guys bank among yourself? I'm very interested. Tell me a little bit more about the FIRE movement. Is it individual? Is there a movement? Is there some type of centralized, cohesive type of strategy? A little bit more about that.
So just imagine it's like imagine an organization that has like one central idea, and then you just have multiple different outfits that have a different way of accomplishing the same exact thing. The FIRE community does not have official leaders of any sort. What it does have is a general construct of how we should really like govern ourselves as we prepare for retirement. So for instance, what you would do is you would assess your annual expenses, right? You would multiply your annual expenses by 25. Once you do that, let's say it's $40,000, your annual expenses, right? What you would need is 40,000 times 25, and that's $1 million, right? And with something like a 4% drawdown rate, it'll allow you to be able to get that same experience of receiving a $40,000 payment annually that you would have with a job. You would have that drawn down from your portfolio. So you do that, and then you also mix that with like having as low as possible of just expenses overall, and just creating opportunities for you to go up. But yeah, salute to the chat, man. It is going down.
Oh, I didn't even get a chance to update the stream sponsor.
Man, you gotta type faster, David.
Oh. And look at that, beautiful eyes. El Guapo, he says, I love Friendsgiving. Thank you so much for all the love you give us. I had to start an OnlyFans. What? I had to
El
start an
Guapo's on
OnlyFans
OnlyFans.
for the super chat. PSTLA, you cheap as hell. You cheap as hell. 20 people in the stream and 1,000 in donation. You know, hey, pocket watch it with.
You've been called out,
Oh,
TLA. You've
man.
been called out. TLA's in the sauna probably right now.
Called him out, but man, he is taking no prisoners tonight.
El Guapo's not playing.
He is not playing. Thank you. Let's everyone in the chat put in because he's back. He's back. Everyone put in there El Guapo in the chat. Put El Guapo in the chat, everyone, please.
Wow, David, you still trying to work on that banner from the first. Oh,
Friends giving is not going out. She is not giving up lightly. She ain't. I ain't got what. No, she said that she is not going to give up this stream sponsorship without a fight. Look at
David, you can look. How many words do you type? How many words do you type per minute, man? We gotta get that
banner.
Fast enough. They keep changing every time I go in. Let's say Perry tell David to type faster.
David was like,
I'm
come
trying.
on, David.
Hunt pecking.
My secretary is the one that usually does this for me.
That's it. But I'm gonna go. Look. I'm gonna type friends. You're right. I'm gonna have to type faster. I'm adding you back to the stream sponsor. I think you got it. I'm gonna have to look it up. But
you're gonna have to look up how to type faster.
David, you better use another tab and use that chat GTP.
Yo, you need to use chat GPT to type your banners. I've never thought about that.
I'm an engineer. I'm trying to be accurate. I'm adding things up and stuff. Before I know it, it's time to change the doggone screen sponsor again. El Guapo. But I think Friendsgiving got you. I think she has you. I'm going to go back and look at everything. But getting back to what? Oh, she's putting David. Come on, man.
Come on, David.
All right, I'm going to do it right now. I got you.
David, get her in.
I got you, friends. I got you. For sure. All right. Tim, continue on, please. I cut you off.
Oh, I was done, but I just kind of piggyback off of one of the points that you was making about lending. I think those are some of the things, but also too, I think people now really should identify having a strategy, because let's just say right now, if we do have a bank run, my question is, what are you going to do? And then the next question is, even if your FDIC approved, how long is it going to take for the government to get you your money? So it's just some things to consider, because if it's not turnkey, they say, oh, you got to wait a week, just like when you deposit in a check. Well, you might need to eat and still have bills to pay in that week. So I guess that's something to really think about. Exactly. And then the question becomes, what are some alternatives? Well, that goes back to kind of what I shared on the first stream in the comments section, was you can look at having some of your money in your brokerage account, where in your brokerage account, you have something that's similar with the SIPC insurance, and that insures up to $500,000 per person in your brokerage account. Most people don't know, in Robinhood account, your Robinhood account is actually insured up to 1.3 million. So those are some areas that you could possibly look at if you have a brokerage account. They upped their backing because they wanted to make people still feel secure to invest money.
Yeah, that is a good point. As I think about it, even if you think about the tax returns, right? Like, it takes a while for the Department Department of Treasury to send you that check, right? And we're still waiting on snail mail a lot of times. I mean, even the idea of waiting for direct deposit, I don't know. That is a tricky situation. You'd have to figure out, like, do they have staffing in place to allow something like that to actually take place in the first place? And this is what this was the argument that I was making before, is that it's not that the money is not there, but if there's an insurgence of people who are all doing the same exact thing, we're in trouble. Just like any time, whenever there's a tropical or a natural disaster, we have the same exact issue with the insurance companies. Is there's an insurgence of people who are coming to the disaster area trying to work for cash because they know people are desperate to at least get to a halfway decent situation from a living standpoint. And then the insurance companies say, hey, we'll just reimburse you on the back end. Just do whatever needs to be done.
Absolutely. Absolutely. So the AV, I want to go back to the mentality of banks. Yeah. You know, I want to do this quickly before, El Guapo mess up my calculations again with the with the super chat. I want to, if we could, with your 15 years of banking experience, do you think that community banks are freaking out? Do you think that they're going to have a knee-jerk reaction to what's going on? What do you think is, because the Fed is coming out now, the Fed's coming out in February. They're going to be, in next month, on the 5th, and there's going to be talking about the basis points. They're going to either keep it steady or they're going to raise the basis point potentially to 25 basis points. If that does not happen, what will be going through the mind of a regional banker?
Okay, so it sounds like the question is broken out into a few pieces, right? So I think the first thing we need to do is separate big banks from smaller banks, community banks. I think community banks are not as freaking out as a lot of people would expect them to be, because they've always operated on this model compared to bigger banks for a really long time. And, I always talk about like different lines of risks. Banks have that line of risk, we call it like the first line of defense. You'll have a risk department with, like, in a big bank, 100 people just in first line of defense. You'll probably have another 100 people in second line, and then you have third line. What that means is there are departments that are designed to protect the bank from losing money, right? So it is very likely that community banks also have risk departments that are set up in this way to start thinking about, hey, and their jobs is really to, like, test things out. Like, okay, in this scenario, could we lose money? In this scenario, could we lose money? It's very likely that they've often tested this because they're smaller. They've had to test it to see, okay, if one of the banks failed, because it happened in 2008, it was more on the mortgage side. In this case, this is like an actual bank failing on the venture capitalist side, or, focusing on VCs and tech startups and things of the like, right? That was their focus. However, these risk departments are so sophisticated. And you see how we were just talking about consumer banking technology? There's also risk banking technology. So they have to work on that type of stuff and calculate it out for years ahead. So I'm almost confident that these banks have thought about this stuff years ago. But as far as like a regional banker, that brings us to the second half of the question, right? Mm-hmm. For a regional banker, it depends on where you are. I think you want to start looking at staffability with where you work. A lot of people are looking at their customers, because look at what happened with SVB. Silicon Valley Bank was doing well. I have one of my best friends works for their direct competitor. And for the entire month of March, I still have not been able to talk to my best friend on the phone for nearly a month because this is how busy they've been, because they're trying to keep their people from freaking out from a bank run, from freaking out and leaving. So from a communication standpoint, I understand it. You arm a CEO and put him on the news to say the wrong thing, and the wrong thing can happen, and it can cause a bank run. For a regional banker, I think as long as your clients are still there and they're not running and they're not calling you every day in a panic, it should be fine. So smaller regional banks should actually be good because they're not going to have these big VC reactions when a CEO says the wrong thing on a shareholder call or on the news.
Perry, you agree with that?
Yeah, I do. Yeah, I do agree. Something I wanted to just ask you guys really quick is, do you guys think they should, what's your take on how all this is managed as far as, Intentional Millionaire spoke to something earlier about essentially they basically have to somewhat bail out of these situations, right? But sometimes my thought is you just rip the Band-Aid. I'm going to rise from the ashes regardless. That's just, now I know that's a singular thought about just me and mine and my family, right? But at what point do you just have to say, look, rip the Band-Aid and just let people fall where they do and dig their way out? Because the ultimate thing is at some point, for at least for the U.S. to get back to being strong, the problems have got to be fixed. I mean, the kicking the can
Perry,
down the road.
I want to stop you there because it wasn't, with the SVB, it wasn't the depositor's fault. It was the bank's fault. So are you saying that the depositors need to, rise up from the ashes when they did nothing wrong?
I'm more so talking about just not just the bank, but I'm talking about the overall issues we have. It's just always something, right? It was this time it was SVB, but next time it'll be something else. 08, it was the housing market. What's next? Whether it was even in crypto, Sam Bankman-Fried, it's just always another, whether you want to call it scam, grift, mismanagement. And one thing that America has at least shown since 1970 or 71, the gold standard is the oversight, regardless of who's in office, doesn't work. It's trash. They're not fixing anything. And at what point do we as a nation just say, look, we gotta reset this thing? And I just believe in anything in life, right? The strong survive, but we refuse to let the strong survive is what I'm saying. So the bank issue is a little bit different, obviously, right? It's not their fault. But the thing that I guess for me is not only will it be fixed, there's really no repercussions. That's the thing. At least Lehman Brothers went under, right? So what I'm saying is okay, we fix it, we take care of the people, but the practices won't really change. And who is it next? So I'm just wondering what the real solution is long term, so we don't just end up back here, 5 years later, basically, if that makes sense.
I know Tim said that he wanted to let everybody burn last stream. You still agree with that?
Listen, man, big bank take little bank.
Yeah.
Y'all know that song, right? Remember last time? It ain't safe. It ain't safe. It ain't safe. Now we're talking about big bank take little bank. So I think it's important to really understand. Remember, in 2008, Cisco was holding at least like $300 billion in cash at the time, and they were buying out this company, buying out that company. This is the same exact thing I believe is going to happen. The bigger banks are going to buy out the smaller banks. They might still allow them to operate as a subsidiary, but they're still going to be involved potentially in a managing component of business, and they're going to allow that to stay in place for the purpose of really just making sure that the consumers are still having confidence, and there's not a bank run that's actually being incited as a result of like people saying, hey, I don't know if these guys are taking out their money, then we need to take our money and only do business with the big banks. I just think that ultimately it's important for us to at least know worst case scenario, what can we do? I don't know with Perry's position, if we can really say what's the best way to fix it, because like right now we're talking about a situation where there's multiple things that are happening at the same time. We have the bank issue, we have the currency issue, we have the economic issues. I mean, it's difficult to really pin it down to one thing. And what should we say should be the first point of reference that we should really say, hey, this is where the issue is at. We're going to address this first and then come back to these other places. It's really like a situation where we're literally being kicked while we're down right now. And I don't know what's the correct way to do it. And I don't know if anyone can really speak to that at this point.
Tim, are we being kicked while we're down?
Absolutely.
Because the Fed came in and basically saved everyone, right? I mean, they bailed out everyone, except for the managers of the bank.
Right. And I think that's why the Feds made sure they stepped in and had to honor beyond the FDIC limits, was because with where the economy stand currently right now, with high inflation, interest rates high, mortgages kind of in limbo in some areas, I think that they had to do something, because the American consumer right now is really paying attention to their cash and their money, because with stuff being so high, I mean, it goes back to what Perry was sharing earlier. Some people not eating to pay their mortgage. So if you're not eating to pay your mortgage, you're going to be more conscious of what you have, because survival is huge. And the cost of everything is going up. So I think they had to step in, because we can go straight from recession to depression just in an instant if the bank run was to happen. If they did not step in, Sim shared where 2 banks failed so far in 2023, but that would have been more in double digits if they didn't step in. So, and what does that does? Because if you go back in time to the Great Depression, when we did happen, that was the whole purpose of them creating the FDIC concept, was because they wanted to put the confidence back into the consumer. So this was just to re-emphasize that confidence, because people are in limbo right now in the financial state. The markets was down. Some markets is still down. Some is creeping back up, but people is not getting back in. Even when you think about crypto, crypto was down, but crypto has turned another feather. When you think about Bitcoin, and a lot of the stable coins, they turn another, they went back up in the next direction. But to me, I still think part of it is manipulation, market manipulation. Because here, think about this. So we just have Sam Bankman-Fried got into this issue. Everybody ran out of crypto. Now we got SVB done something. Now it's making crypto great again. But in the same token, a lot of the major players in crypto, some of them coming up, dead, missing, and all this goofy stuff. I think part of this is part of somebody else's strategy, that we're not part of those conversations. Because when you think about even market manipulation, let's just think about AMC and on the GameStop situation. That was straight market manipulation. So if we can do it, if the average person can do that, when GameStop happened, that started on Reddit, which you're just your average investor. They manipulated the market. So if they can do it at that level, why couldn't they do it at a bigger level with people with money? I'm talking about generational, ultra wealthy money.
So Peter, I'm going to get to your question, but I want to, because I haven't thought about the market manipulation angle. AV, you have any thoughts on that? Can the market be manipulated in the banking industry?
Absolutely. Tim was just cooking. He was just cooking. I was over here on mute. I was like, Tim, that's it. Like, I was just snapping over here, like agreeing exactly what Tim was saying, because it really did start with GameStop. I can't even tell you guys how many boardrooms I've been in after that happened, where we're thinking about a strategy to address the fact that the market wasn't manipulated in that particular scenario. If you really think about the bank runs, and I want to come back to a question that Pig and Coin asked in the chat, and she asked particularly what happens when people you are involved in a bank run. You know, we talked a lot about the FDIC and we talked about the investment insurance as well. Typically, people are insured FDIC wise up until $250, right? That's per
250,000.
250. Yeah, sorry. But that's like up until that point, right? That's per bank, not per account, right? So these people that have money, what they actually do is they scatter it. So they'll have it at one bank over here. They'll have it at another bank over here. They'll have it at another bank. So when they perform a bank run, they're just not rocking with your bank and they're taking their money and they're leaving. I don't know if my soundboard still has a run sound.
There we go. We heard you.
Oh, yeah, it's for my last stream. The run sound's still there. They leave. So, but when they leave, they're bringing it to another institution. But these people, when they do this, they're really being cognizant of, hey, I can't bring it to TD because I already have 250 over there. I can't bring it to BOA because I already have 250 over there. So a lot of the people that are doing this are either retired or they have a lot of money or they're advanced in portfolio planning. I think the big blow up we had on my side is when we were like, oh, does everyone have 250? And if, you know, the FDIC would ensure that in that scenario, that's a lot of money that the government would have to give out, right? But at the same time, you also have to look at it like when a bank run happens, in a sense, that's kind of, you know, market manipulation. Because if everyone's leaving, how does that impact the market to the point where the government has to step in to help this bank? Because that, what did they lose? Like 3 billion in deposits or something like that? They lost so much money in 24 hours because of something that someone said. But at the same time, it wasn't just the CEO. The root of this was bad management. They had so much money in that bank, but instead of being conservative with their decisions, they wanted to put the money in bonds. Guess what? The Fed raised the rates. When they did that, the value of those bonds went down. So anyway, long-winded answer there.
And just so everyone is aware, the bank run issue is already solved. We're just not there yet. Between Fed now and their basically becoming their attempt to become the new Cash App, right? I mean, that's basically, and then we are going to go to a digital dollar. It's going to happen. At that point, now they're going to feed us that everything's good, but when there won't be a bank run, because when they want it to stop, you're not going to be able to get your money. And then they're going to be saying, hey, they're not going to be saying, hey, we'll back you. It's going to be, hey, don't worry, just wait some time. We've got your money. But it's not, the comfort is we're going to comfort you, but it doesn't matter anyway because you can't have it. I mean, because at that point, when it's a digital dollar, it really is about taking control. And then, you know, it's on a blockchain too, right? So it will be on a blockchain. So, and that's something that I know some people in the chat said, the digital yuan, that's already taken place. And if nothing else, America's going to want to do that, right? Because if China's already doing it and it's a rush to the new form of money, well, with America having the power over money right now, well, they've got to rush to do it, right? So it's like an arms race for the digital dollar. So those things are just coming. And it's not even about fear. It's just, we can be honest. We know how these things are a slippery slope. And once it becomes digital and it can be controlled, you know, it's likely to happen is the way that I see it. But to that point, we are digital already, right? We are digital as far as credit cards and all that, but everything's so broken up that it's just not as easy to stop the flow or whatever. So I just want to point that out.
I understand. Okay, so let's we have a couple of super chats here. I want to and a few of them have some questions. It says technological chaos. Thank you for the 1999. And he says that I would say that the banks are in competition of getting access to high liquid safe assets that are becoming for scarce, as reflected on this yield of the 2 to 10 years treasuries declining, and it is recursive liquidity crisis. AV, you want to take that one?
You know, it's funny. You give me technological chaos thing because it's him writing it. And for those of you guys who don't know, technological chaos is one of the lead attorney's and strongest supporters. He is also brilliant, right? So when you see a lot of complexity in his super chats, he's actually asking a very thought-provoking question. So I haven't seen you in a really long time, Tech Chaos. So it's really nice to see you over here. So I'm just going to break this down so we can logically get to it. He says, I would say that the banks are in competition of getting access to high liquid safe assets. When you talk about safe assets, that's really where I think we want to start with that, right? When you talk about safe assets, are you thinking like things that are less risky, things that are not in the stock market? So that's the first thought I have. That are becoming scarce as reflected on the yields of the 2 to 10-year treasuries declining. Okay, and so when he's talking about 2 to 10-year treasuries declining, I'm thinking he's thinking of not the bonds. I wonder what he means about the treasuries. And Tim, I know you're more in the investment space, so I'll lean on you for that. And he says it's a recursive liquidity crisis. When he's talking about liquidity, that is huge because that kind of goes back to what Pig and Coin was talking about when Pig and Coin was kind of like, hey, you know, what do you mean by bank assets? Are you talking about funds that are liquid? Because as you guys know, things that are tied up in investments are not technically liquid funds, right? Because it's tied to the market, right? But Tim, any light you can shed on the treasuries?
Yeah, so I would think he's referring to treasury bills, I-bonds, T-bills, the really safe stuff, which that's what got SVB in trouble. Because they was betting that interest rates, all it was they was taking a gamble, really. They was betting that interest rates because, you know, rates are up, everything was going up, inflation was high, and the Feds was kept increasing rates. So they probably tried to bet that the federal government was going to eventually decrease interest rates because they had kept a steady pace of taking them up. So they thought they probably was going to put it into, you know, a 90-day treasury bill or something like that. And then they'd be able to turn the money, get it back in-house, and then go out and do more loaning.
Right.
And
lending on deposits. Yeah. Lending on deposits.
So, but I think that failed because, you know, a lot of people thought that eventually they was going to lower the rates, but the Feds kept taking the rates up.
Hey, so David, look, hold up, man. Hold up. Let's go back in the chat, man. I think that you might have been.
Did we skip El Guapo tapping out?
The mark a little bit, David. Man, David's over there pecking at the keyboard. He forgot.
Did we skip El Guapo at the maximum that he can get?
Yeah, well, that was next. I wanted to answer the question from Technological Chaos, right?
El Guapo's out there walking. He's walking on the street right now, barefooted, no shoes, up there in Baltimore.
Listen, El Guapo got shoes. He got them chancletas on deck, okay?
What's that comment? El Guapo was saying that he cannot give anymore.
El Guapo just left the title loan office.
He just made his third stop at the title loan spot. He's out there trying to duplicate his title so he can get some more money.
El Guapo, look. I'm going to pull up his thing. And they've been talking back and forth. It's in the chat, got buried a little bit. But I did see where he was saying, he and Technological Chaos was saying, hey, listen, you know, he's maxed out. And so, and maxed out. Here we go. Beautiful eyes. $500 limit is on hold, is holding us back from donating all this knowledge. You know what? Look, again, we have to salute El Guapo and thank him for all of the. It's clear that I missed the a couple of his donations, his super chats, and I'm going to go back up and add them up. You know how slow I am on the calculator. I'm gonna have to pull up that chat GBT to help a brother out.
El Guapo just parked his car at the pawn shop, man. Come on.
Yeah, I know. I'm gonna put him. I'm gonna El Guapo. Thank you, man. I'm gonna put you in the. I'm gonna update the stream sponsor, and I'm gonna still have Friendsgiving as co-sponsor. But El Guapo, looks like you got it, brother. Thank you again. I really appreciate you.
Hold on, you gotta give him all the buttons for that. He has
all of them.
nuclear. He has nuclear bombs and things. For
What's,
people
I don't
dropping
have. Look,
on his side.
Here's what I have. I have this one. I have the clap. I have that one. And I have those. I'm giving them all. I'm giving them all of them.
Hold on. There we go. Hold on. We have to really give it to and I think El Guapo is a military man.
Oh.
So we need to bring in here's the thing. You guys ever watch Total Recall?
Oh, yeah.
When Arnold Schwarzenegger was just like, fire! Oh my god, fire! Get to the choppers! Now we have to give El Guapo heat. We have to give El Guapo heat.
Let's go.
Max out on a super
everybody on the panel. If you have a soundboard, light it up. 1, 2, 3, let's go.
Perfect.
There we go. Listen. Choppers.
I grew up on Arnold Schwarzenegger and Rambo. Listen, I spent plenty of my nights watching.
Fire.
Man, what was
You have
the
to
name?
give him a
Delta,
fire.
was that Delta Force? Delta Force. Watching Delta Force, watching Rambo. Listen, I was a military man through in passion for sure.
Look at seriously, El Guapo has like the big explosions where people give supers. So that's why I was like, hit all the buttons. Everybody hit the buttons for El Guapo.
Yeah, and let's do it one more time and type El Guapo in the chat. Thank you, El Guapo. On 3, 1, 2, 3, let's go.
Oh shit!
El Guapo, let's type El Guapo in the chat. Thank you, El Guapo.
Yeah, didn't he say he got a tribal payday loan, 800% interest?
El Guapo is out there with it. El Guapo, what type of car you have? You got your Tesla on there? El Guapo's turning the Tesla in for a Chevy or something. El Guapo, thank you, brother. Thank you. I appreciate you. Let's get El Guapo in the chat.
El Guapo's the man. He's amazing.
All right. So we have another question. I want to bring that up, and it says, one second, let me find it here. And Tim, this question was kind of piggyback off of what you were saying. Peter, investor, says that which is the least important issue of the collapse of the banking system? 1, lack of liquidity. 2, lack of confidence. 3, lack of insurance protection to the banks. Which one? And anyone can join in.
Confidence, easily.
Yeah,
everything else is fake. I mean,
yeah.
Honestly, right? I mean, for real, right? Everything else they've kind of can manipulate, but confidence. I mean, that's because if that goes, everything else goes. But as far as that's kind of my take. If confidence goes, that's really when it gets really ugly. But the lack of liquidity, well, then they can they can always steer the confidence to make up for the lack of anything else. But if the confidence goes, everything else is a disaster.
Exactly. Actually, the confidence is the calluses of the other two. The other two don't matter if you don't have confidence. Who cares about bank protection when you don't believe the bank gonna even be there?
Yep.
And same thing with liquidity. If you don't think the bank gonna be there, you ain't gonna put no money in. So, right. I mean, you got to believe in everything else to make the other two operate.
Absolutely.
So, confidence, even though the bank may be on solid ground, you're saying that if the public is not confident that's going to cause a bank run.
Absolutely. Because the bank run is going to start, the bank run starts with the individuals, but the individuals going to gather their perception based on what the media put out. So it was absolutely, that's the reason why the government stepped in and had to do what it had to do and make it public, and then have UBS purchase SVB. So with those two things happening, it kept confidence kind of steady state.
You mean UBS bought Credit Suisse?
Oh, Credit Suisse, yeah, Credit Suisse, yes. But those two things. But
and I found it. We have beautiful eyes. We El Guapo saying, salute technological chaos. Stupid Google won't let me give any more money. He said, give any more this time. Thank you. Thank you for maxing out. We're going to update the stream here. We have Marie. Marie says, I'm late. My trailer is in the shop. Thank you for the stream. I thought for a second there she was with Grappo there, trying to get some more money for the cash apps there. But thank you, Marie. Marie, 2020. Thank you so much.
What does a bank run mean for you guys? Just curious. And what I mean for me, it doesn't mean anything. I mean, and the reason I say that is because I have so much in investments. I mean, it just doesn't really mean anything. You know what I mean? Like, as long as money keeps on coming in paycheck wise, right? And from the investments I have, whether it be real estate and things, I have so little in the bank, honestly. I mean, I do have savings, but it just wouldn't really honestly change much for me personally. And what I would just have to do if it really got tight, I would just flip and be like, look, I need you guys. Now it's going to mess up some things, obviously, but I would just tell the people that my rental properties, look, bring me that cold hard cash. Do what you got to do to get it. You know what I'm saying? That's the way I look at it. So what I do, I'm curious of who is it really affecting? And I would just assume it would be those who just 100% have whatever, because if you're broke, it don't really affect you as much as you think it will, right? But if you got money just stacked up, that's where I would see it affecting you the most. But I'm just curious you all's take on that.
Yeah, I mean, Perry, I don't think that it's really an issue for anyone until your paycheck bounces,
I see what you're saying. That makes sense.
Once your paycheck bounces, that's when it becomes a crisis, right?
Right.
Because now you're scrambling to keep everything together. But that's part of the reason why the Fed wanted to make sure that they secured SVB, because there were so many organizations, Etsy, a lot of the startups, they were being backed by them having their assets over there at SVB. So, I mean, imagine the confidence from the companies who were supposed to be regarded as being like top performers in the economy. Now, if their checks start bouncing, guess what? Small town USA people are going to start thinking, we can't afford to sit up here and bank on the economy or the banks being able to hold our money if they can't hold the money for the companies that have a high valuation. At least that's my opinion.
Isn't that more reason why really it shouldn't be a worry? Because then at the end of the day, if that happens, we will reach a point where nobody's going to get their money. And then we're back at the same place where the government has to say, okay, you know what I'm saying? Aren't we going to always arrive back at the same point where it's like, if the middleman can't pay and it's enough of them, the bank's going to have issues. So it's almost like as if you're going to choose who to work for, it's almost like, well, work for Dave Ramsey, right? Because he's got $650 million in cash, well, real estate, right? That he can access cash. The check's coming. But outside of that, all these defaults as they happen, whether it's business, personal, all of that, the snowball effect is going to, because of the state, we're going to always end up back in the same position where the government, regardless, is going to have to be like, hey, we got you, right? I mean, we're going to always come back to the same place, it seems like.
Dave Ramsey was in the same situation, though, right? If we're being
back
honest,
in the day, yeah, absolutely.
No.
Oh, you mean recently?
In the pandemic,
right?
Because think about his organization. It's fed by people attending his events. Think about it. If he's not able to travel and go around and pick up $100 from each person in all these little cities, how is he going to be able to fund everything that he has going on, whether it be production, the staff that he's taking on? Even he felt, a bit of a bite from the economy. So that's why, I kind of have it just depends on the day how I feel about him. All I can say is I can see his pivot is more so less about traveling around the country and more so about bringing people to his facility, right? Now he's the destination for event. He has an event center at his property now. So now he can start bringing people in, charging them $100 for them to come onto his property, and he's not relegated to, Milwaukee, Cincinnati, Chicago, and whatever they have going on over there.
Let me just push back on that. I think it's a system thing, though. He still had it. That's when it's about liquidity, though, because Dave Ramsey has no financial issues whatsoever. Because he has so much in real estate, 100% paid off. Even if he couldn't go do the touring and all that, he's got so much stockpile. He could go for 20 years and pay for stuff. The problem is when you're in a liquidity crisis, I've still got to sell off that 700 million or whatever in assets to be able to actually get that cash, which no one can seem to get, right? So I'm just saying, from a financial aspect, he has it. It's there.
Would you talk about Dave Ramsey personally?
I'm going to jump in on that because I think it's a big deal because you got to factor in at what cost. See, because the cost is he has all this real estate, but he got to sell it. If nobody is doing nothing financially, who's going to sell it to? That's the question.
But he doesn't really have to, only because of this. His real estate is fully mixed, right?
Right, but
no matter how tight it gets, guess what? The real estate I have, you got to lay your head somewhere. Someone will pay me to lay their head down.
But what about everybody, all the other organizations that's not like Dave Ramsey is the question.
That's why I'm being very specific. In this case, I'm talking specifically with Dave Ramsey. The problem where it becomes, yes, that's why I said as a whole, set aside Dave Ramsey, it's going to always come back to the government having to always bail people out because it's like you said, it is the price of how you get it, right? So that's why I was just saying to Sim, it's not because there's a difference, right, between that's just like this. There's a difference between someone whose net worth is 1 million, in a shoebox versus 1 million in the bank versus 1 million in real estate, all free and clear.
Correct.
The difference is when times get rough, right? That now the dumbest method is in the shoebox, in my personal opinion. But when times get rough, that's the person who's got all the leverage, right? So yeah, no, I definitely agree with you. I think the Dave Ramsey piece is definitely kind of a unique thing, but as a whole, you're right.
One-off, but as a whole, is that what cost?
Right.
Because
I agree.
Again, it goes back to my question: how long is going to take for the government to satisfy the needs of the people?
Right.
When you're talking about millions of people.
Yeah.
The best example you can give is the best example I can give going off historical data is the Great Depression. That was almost 10 years.
Yeah.
But look at the trauma that was caused to the people. See, so yeah, I get what you're saying. They're going to come in to save the day, but it's going to take a while for they save that day. People still had to eat.
Yeah.
People are worrying because I'm telling you, when the banking system fail or get stagnated, everything's going to crumble.
Right. Yeah. No, I do agree. I do agree with that. So what's the resolve of how people protect themselves then?
I think one, they got to be diversified with where they're putting their money at. But then I think they got to pay more attention to the safeguards of the accounts that they're putting their money in.
Right.
Because one of the things that some of the wealthy people are doing, they putting it into certain types of brokerage accounts, customized brokerage accounts. So that way they don't have to run into this type of scenario again.
Makes sense. Makes a lot of sense, actually.
So we have a super chat that says that I think this is to you, Perry. He says, can you speak on the digital coin, the Fed's digital coin?
Yeah. So
Drew Beats.
Yeah. So, I'm not 100% positive about all the details. I read about two different articles about halfway through, but Yeah, basically it's kind of like it really is essentially like Cash App as far as not well the digital. He said the digital coin. I thought he was talking about that Fed now. Yeah, so the as far as the digital coin, which it's being called the digital dollar. The on that the goal is pretty much where we'll move the dollar. It's basically like a cashless society, and the dollar will be moved into essentially a cryptocurrency that resides on the blockchain. And, and they may do it kind of like the yuan where they kind of give a little bit out for free to get people to give it a try and then kind of hit you with, hey, this is how we're doing things. And by the way, it has creeped up in a lot of, even going back to the pandemic, there was talks about, and this was bills that weren't going to go through anyway because they didn't have it together. But there were literally bills during the pandemic, those bills that were getting signed to pay people the stimulus. It mentions it in there. It's in there about a digital dollar. And basically what they wanted to do when it came to the second stimulus check was try to be ready to pay people digitally. Now they weren't ready to do that. But that did get shoved into a number of bills, and it's just something they were gearing up to do. I'm not sure about the timeline, but we'll keep on hearing about it. And yeah, it'd be going away from the dollar, and it would all go. So when these issues happen, right? What I'm curious of is there's no way that I can see this being, because a blockchain is a public ledger, right? But you can have a private ledger. I just don't see any way where we can openly go see the money flow of basically the US, even from a safety standpoint, right? So that's what I'm curious. I'm curious how it's all going to work. But yeah, the plan is to move to a cashless society, basically.
Awesome. Thank you. Thank you for answering the question.
You're welcome.
So we have a couple of friends of the channel. We have 10 Plus Sounds. Dave Ramsey made the event virtually quick, but he also said a salute. So 10 Plus is also a member of the mastermind. So salute to you, brother. We have a couple of other questions. We have the technological chaos. This is an illiquidity crisis, having money, the biggest worry. The biggest worry isn't finding buyers that you're forced to sell your assets and triggers lower assets values probably till near zero. So what he's saying is that the biggest worry is not finding it being liquid, but having the buyers. So I think that was the comment when we was talking about Dave Ramsey and having all of the real estate. So I think that's what he was talking to. Any comments on that? Is that a worry? Are there buyers always out there no matter what?
I think it depends on your investment, right? But in real estate, I don't believe, and it's how I invest in real estate, a buyer's never the issue because I never plan to sell. And my belief is everybody has to, when I acquire an asset, a good example, I have this fourplex. I've acquired it at a price where I could literally rent it out for $250 a month on each of them, and the bills will be paid on it. I can find an individual, believe me, regardless of what crisis is going on in the world, I can find someone to rent out a place, a 2-bedroom for $250. So that's, to my point, is the way I'm looking at it, I don't have to worry about selling ever, regardless of, unless the world could be blowing up. It doesn't matter. It's just about covering the assets, and I'll cover it and make some cash. So that's to that point. Now, for some reason, if you feel like you have to sell, yeah, it's an absolute issue. But if you're buying in the right time, you shouldn't want to sell. That's when you want to acquire, because selling is a problem. That's when I can start to get a piece of that equity that you got, because you're trying to sell. So there's still going to be people who are sitting on money ready to buy, and that is, i.e., happy. That's BlackRock. That's exactly what they're doing. So it's not about it. You can sell, but it's what price you're going to get for it is the problem. If you have
that reminds me of in 2007, 2008, in the housing crisis, where
Crazy.
the housing stock went down to what 30, 40 cents on the dollar.
Yeah.
And there was buyers all over the place that were gobbling up those discounted homes.
Yep.
So I do think that you may have the traditional buyer may have a problem, but there's always going to be someone out there that has money, that's liquid, and is willing to purchase at a discount. I think that's especially in real estate,
Right.
And Perry, I agree with you 100%, is that no matter what happens, you got to lay your head somewhere.
Right.
So it's pretty stable. Sim?
I don't know. I think
here's Sim.
I understand.
It ain't safe.
Perry.
It ain't safe.
Listen. Y'all already know it. Big bank take little bank, right? Listen, it's easy for Perry to say that, right? Like, I would ask Perry, do a survey of your neighborhood, right? Take a look in your neighborhood. How many homes are actually owned by legitimate homeowners, right? Because when you have companies like BlackRock who are buying up homes in these subdivisions, way over ask, right? Because they can write that money off, right? But they're buying this house way over ask. And then now here you are saying that they're going to be able to actually sell or unload these properties when they're upside down on them. I don't know if it's really practical. And we're not in the same position as these hedge funds who really don't belong in the real estate market at all, with regular people, right? So we have them here playing with corporate money in our neighborhoods, and there's no way those houses will ever go back on the market, not at a reasonable rate, especially if they're using, funds from God knows where it came from. It just doesn't make sense to me for us to be able to say, yeah, you can do that because you're in a position to do that. But you talk about like families who are trying to relocate to a nice neighborhood, they're attempting to buy into the neighborhood, but now you have the BlackRocks, you have the Zillows that bought into those neighborhoods, and now those houses are way over ask, and there's no way those companies are going to be ready to unload them unless they're at least maybe, I don't know, I would say even breaking even, but just the opportunity for them to be able to write it off is unfair, that in of itself.
But also you got to think about it, Sam, with assets, right? And it doesn't have to be BlackRock, right? Because there's enough mom and pop. I mean, there's enough smaller outside of BlackRock, but still, for example, I would tell you, why would somebody sell a $60,000 Bitcoin for $8,000? It's because now I won't do it, but I don't need to. It's what the time calls for. So my point is, even with BlackRock, now it depends on all their other investments. But you best believe with all those other investments they got, if they got to cover a spread and got to take a $50,000, $100,000 hit over here on real estate, they'll take it in a heartbeat. It's just write it off to cover this, right? Especially if they're dealing in margin and stuff. When we start to talk about margin, they don't care about taking a $300,000 hit to cover this. So I do agree with you in like a vacuum, but I do think you got to remember the price of something and what it's worth as stuff changed. And I've really even noticed this in crypto. It's funny in crypto, even something as simple, people were saying, man, who would pay $300,000 for an ape NFT? Well, someone who the market's been extremely good to, and they made like 5 million. Now who would do it? Like maybe 2 people. Whereas then, right, maybe 100 would. So yeah, I think that the nuance overall, I'm just saying, you got to think about it. To me, in the real estate sector, which most showed that was the fact, the optimism of what people do know in America is that things will always come back, right? Just because it has. So I look at, outside my subdivision right up the street, a house that was purchased in like 2010 for like 85,000, and then rented it out and sold it for 350, right? So that's all I'm saying is, I think things will move. You can sell, but just like any other back and forth in the economy, yeah, you're gonna definitely take some hits. And to your point, Sim, will it be real estate they're willing to take the loss on? No, it may not. It may be some other sector that they're deeply entrenched in. So it's really hard to say exactly which way it would go.
All right. So, well said. You know, everybody's bringing up some really, really interesting thoughts and spins that, quite frankly, I haven't thought of. I got to really think about this because in the investor space, I'm looking at it one way, but there's a lot of different angles and moving parts here. We have a question. Will gave us a super chat, says that career advice, and this is for anyone on the panel. Questions for the panel. I'm in the process of evaluating 2 job offers, NASDAQ versus Federal Reserve. Any advice? This is going too fast. Any advice that would help me make the best decision for my career? Anyone?
Well, with the limit.
Well, first for Will, just to be in a position to have 2 high-powered
Amazing.
offers.
Shout out to Will.
Salute to
Shout
you,
out to Will.
my brother, man. Go ahead. Anybody have
Absolutely.
anything for Will?
Well, I think there's 2 ways of looking at it. With the limited, now that NASDAQ and Federal Reserve, right, that's limited information based on, because I don't know what their role is, right? But I think there's almost like 2 paths. I think if you go, where do you want to end up at, right? Like, we already know the Federal Reserve probably, from a long-term perspective, probably really good job. But, you know, that's something that if you work for the Federal Reserve, what you can learn there, what it will offer you down the road once you go to the public sector, right? It's a wide open door because you're going to have an idea with the Federal Reserve, how they work, things like that. So you do see a lot of that, even if it's the FTC, just different things. You see people kind of go in on that side and then cross over. I think a lot of lawyers do that as well. They may work for the government, and then almost in every industry, people work for the government and then cross over and then go on the other side. No, and AV may know, just like people may work as a prosecutor and they understand that side of it, and then they go on to the defense side. So I think that would definitely offer something good for down the road.
Yeah, and let me jump in on this one, Will, because I think you have 2 potentially really good options for you. I've had the opportunity to work for retail banks, but also on the investment side. You're looking at 2 megatrons of places to work at, meaning, looking at the Federal Reserve, that's a lot of job security there. So if your end game is job security, I have an aunt that works for the Federal Reserve in Boston. She's been there for like 30 years, has not left. So if you're looking for something that's stable, that you don't need to move from, that might be a really, really good thing for you, right? Because it's a government job. You get government benefits. So that's something you have to think about when it comes to you making the decision. NASDAQ is also huge. NASDAQ will probably open up bigger doors for you because, I can tell you the investment company that I most recently worked for, we were hiring people that worked at the World Trade Center. So if they came to us with a resume, we're like, oh, this person's worked for the World Trade Center. So if you're looking at something long term, and it also depends on your age, like let's say you're like 25. It'd be one thing if you're looking at growth and trajectory, that would be huge for you. If you're 35, that might be a little bit different. If you're 45, it might be different, right? So to Perry's point, I think we just need a little bit more information to guide you in the right way. But both of these are very, very strong options. But I think it's very important when you're on this career journey to really think about what the end game for you looks like. Do you want stability and to be able to do something day in, day out? Or the Federal Reserve also comes with growth, but just know it's going to be a little bit more stunted on that side versus something big with NASDAQ, because you could go to any investment firm and that's going to be like cream of the crop on your resume, brother. So shout out to Will.
Yeah, salute. Big time.
Salute, Will. Go ahead. Salute, brother. I would like to know, and AV brought up a question. Just put in the chat how old you are. So that's awesome. That's awesome. I have another question from Peter Investor M. Anyone familiar with the banking system like I can't pronounce that in Europe. Luxembourg?
Yeah, Luxembourg.
In Europe and Switzerland. Can we adopt it in the US? Anyone?
I'm not familiar with those banking
Yeah, I'm not
systems.
familiar with.
No,
I can jump on it.
Not
What you
either.
think, AV?
Yeah. I'm just gonna jump on this one because the company that I recently worked for, I'll just be honest with you guys. I don't work for them anymore, so I have to be very careful because even leaving them, I needed to sign a contract with what I can and can't say online, right? But it was a
Shout out to AV with the non-disclosure.
NDA. Shout be careful with that NDA.
That's right.
They see it. They see the law books. They're like, go ahead and violate it. They're waiting for me. They're just like, say one wrong thing, we'll sue you. They know.
We're gonna need some of that Friendsgiving money if you say the wrong word.
Oh my gosh, too funny.
Shout out Friendsgiving. Thank you for staying in. Go ahead, AV.
And shout out to Will. I think Will is saying he's 35.
35.
He's also saying NASDAQ is starting a crypto custody product. So we'll come to you, Perry, because that's in your wheelhouse. And he would be helping build that out. But as far as Luxembourg, the company that I worked for was global. It was a global investment firm. And they had subsidiaries across the world. So there was a US presence. There was a European presence. There was I think it was Chinese. There was an Asian presence. But there was a small firm that we had in Luxembourg. A lot of banks have, some funds in Luxembourg because of how their regulatory system is set up, right? Europe, if you think about Brexit and all these things that kind of took place recently in the European banking system, it was a little fragile, right? So that money needed to be moved somewhere. Luxembourg is kind of a neutral place, but it's also heavily regulated. So a lot of investment firms do have a presence there specifically because of European markets. So that's what I'll mention. But as far as the familiarity, I'm not even saying that. We're all tired. So Peter, hopefully that gives you some insight into the Luxembourg markets, but you're going to find a lot of boutique investment firms, asset managers in that space.
All right.
And from what I recall,
does anyone else have anything to add?
Yeah, I just wanted to ask AV. From what I recall, prior to the tax reform, can you guys hear me?
Yeah.
Mm-hmm. Yeah.
Okay. Prior to the tax reform that DJT put out, right? A lot of companies were using Luxembourg as an opportunity or a place to park their funds. It's Luxembourg, Ireland, Cayman Islands. Let me see.
You're revealing the secrets. Look at you.
Listen, and I'm gonna tell you, like, in discovering that all these American funds from American companies were being parked in these other locations, right? One of the things that I was most shocked by to discover that here we are, American corporations taking their money and they're parking their money in a mailbox in the Cayman Islands, right? So guess whose balance sheet that those funds end up showing up on, right? So those funds end up showing up on the Queen's balance sheets, right? Because the Cayman Islands is under her rule, right? So to me, it was kind of like an opportunity for us to come full circle, because here America is running away from the UK rule, right? So we're doing everything we can to run away from UK standards and everything that was going on over there. But then here we are taking our proceeds from American corporations and we're putting them on the balance sheet for something that they're responsible for guarding, right? So I was 100% on board with the idea of lowering corporate taxes in order for companies to be incentivized to bring those funds back into American banks and American economy in order for it to be able to benefit, America at large. But now we have this situation happening. Now, I don't know if we can really still have that confidence from a global standpoint where people can still have confidence in America being the gold standard for reserve currency, because now we have conversations that are happening outside of here about, hey, do we need to consider shifting away from the US dollar as the reserve currency for us to do transactions? or do we need to consider something else?
Yeah. It's actually such a great point. I know we're talking about Luxembourg. We're in other countries. And, I did sign this NDA, so I can't go too far into it. But here's what I could tell you. I'll compare it to some legal stuff, right? Some of us are familiar with starting a business. And when you start a business, if you think about business law, you operate in one state, but you also have a presence in Delaware, because Delaware's business laws are a little bit different. So a lot of people will have dual jurisdiction when they operate their business. Okay, principal place of business is Massachusetts and Delaware, right? So you're looking at both of those things. Now, when you think about these big banks, right, almost kind of think about it like that. They select Luxembourg for a reason, which I can't go too far into because of this NDA. Right? But there is a reason why they're selecting Luxembourg if you're a global bank or global organization. And let me not say bank, let me clarify with investment firm or asset manager. That's two different things, right? When you're that big, you're moving money across the world. When you're in the US, you're subject to US jurisdiction, US regulation, and US law. When you're a global asset manager and you move money in, you're subject to all of those countries' laws, right? Luxembourg might have some regulations that are a little bit more lenient. 'Cause think about it. Europe just went through Brexit, and that was, think about their economy. It was tough. So without saying a lot, at least I could be cryptic. Shout out to Cryptonomics. A little bit without revealing too much.
All right. Well, thank you, AV. All right, so guys. So I think that we have really hit this topic. I mean, from an international standpoint, working all the way back to corporate America, to mom and pops, to the kitchen table. I think that we've looked at it a lot. Do we have what are your final thoughts on, hey, what's going on with these banks? Final thoughts. We'll start with you, Sim.
Yeah, so I'd say that, I was joking earlier about us not being safe. I'd say that, the main thing that we can really focus on is controlling what we do with our money once we receive it, doing everything you can to make sure that you have a good gauge of where your money's going, how you're spending it, and also just really considering, if worst case come to worst, are you prepared for what could potentially happen out here? Because 2020 and the pandemic really showed me how the world could come to a screeching halt, So I think that it would be in our best interest to really consider, how can we better prepare ourselves for a potential situation like that? And are we really safe if we rely heavily on the grocery stores, the distributors and everything like that to provide us with our food and provide us with our essentials, So I'd say that those are the things we should consider. We are still relatively safe out here, assuming that you have the 250,000 in one bank and moving and sheltering your money in other locations. That's one thing that we have in place, and we can only just be hopeful that the people who are in power can make the decisions that benefit us overall.
Sim, I'm so glad you came to the light side. You was over there in the dark side. You was that Sith Lord for a second, but I'm glad you came over to the light. All right, salute, brother. Thank you.
I had no choice.
All right, Perry, what final thoughts?
Yeah. So one thing I'll just touch on real quick. I know he mentioned a crypto custody for NASDAQ. So I will say the information that he being able to build that out, because every bank has been really getting onto this. And if they're getting involved, they've done, they know a lot about what's going on. So if they're looking at custody, and a lot of banks are, they know that at least crypto is here to stay in some form. And to be able to build that out and be kind of at the ground floor, just the contacts and the businesses you'd work with, you could get rich off of that alone, because you know what's going on, who's doing what, things like that. So that's another thing I always tell people. You hang out around the crypto space long enough, you'll either end up really, really broke or really, really rich. There's really no in between. But as far as a whole, I think these discussions are very important, but I think what's the most important is, and I've obviously with Sim and Intentional, I've had countless conversations with them over just different sectors of finance. But I think the most important thing is the fact that these things will continue to happen, and just the conversation is so important because we have to be thinking. We should already be thinking now, what is next, and if everything, let's just say Great Depression does happen, what are you going to do to survive? And then not only that, how will you come out of it ahead? Because even though things get rough, what we do know is at some point in time, we're going to see a similar thing like we've seen in the past where times are really, really good. And are you preparing for the really, really good times and not just wasting that? Because you got to be prepared for times like now. So definitely have enjoyed having this conversation, and I always do.
Awesome. Thank you, Perry. Tim, thank you for coming on to the panel. You know, you're the new one. You're the newbie here. And how was your experience? And thank you again. You brought a very, very unique perspective. Final thoughts.
My final thoughts really is no different than Sim and Perry. I just think as individuals, we got to get back to the fundamentals, making sure that we stay conscious of our finances, making sure that as you see media, my biggest takeaway is when you see media, don't always get caught into what's being put in front of you. Go do due diligence and gather more information so you can make a sound decision versus just a propaganda decision. Because the thing about the media is their job is to give you information, but it doesn't matter if the information is 100% correct or 50% correct. So I say it's best to just go gather more information, make informed decisions. And going back to what Perry talked about is just really making sure that you are prepared for when times are great, when times are bad. And the thing I say, how do you prepare? Well, you prepare by gathering assets, taking your income, putting it into assets, then making sure you keep your overhead as far as debt go low. And then in the process, you're investing your money across different banks, different credit unions, different brokerage accounts. So when this happens, you have a safe haven somewhere. Because if you got one haven, that's just like having a house on two bricks. If something happened, it's going to fall apart. That's what I would say.
All right. Thank you, Tim. The Intentional Millionaire, dropping them gems. And last but certainly not least, AV, the beautiful AV. Oh man, all of the gems you dropped, and that we're gonna have to talk to you about that NDA. What are your final thoughts?
Yeah, listen, I think honestly, I agree with all the sentiments, everything that you guys have mentioned. Sim dropped some really great gems. Perry did, of course, Tim. And since Tim went before me, I just want to piggyback off of one thing. He talked a lot about media. And, you know, that's one of the number one things I jotted down when we started this talk and this conversation. Social media is another one, right? Because if you really look at SVB, Silicon Valley Bank, a lot of the panic started on Twitter, right? Because these investment guys were talking to each other. We talked about that big thing with GameStop. Where did that start? Social media on a Reddit thread, right? So it's beyond what you see in media. I think it's really important for consumers of all walks of life, whether you're a business owner, a real estate investor, a person that just has money in a place where you want to keep it safe. It's important for you to be on your P's and Q's and just be aware of what's out there. And, you know, I think the biggest lesson for me as a banking professional that's also in the legal space is this is how important it is to have executives know what they're talking about. Because if you say the wrong thing, it can legit cause chaos.
Shout out to Elon.
Like legit chaos. Like think about that. Like I said, I have not been able to talk to my best friend on the phone. And then shout out to one of my other friends who's actually in the real estate space who stopped by in this chat a few minutes ago. Shout out to Jeremy Brandon. He came to my channel recently and we had a conversation about real estate. But this is the thing, is just making sure that people are aware and you do your own due diligence, because you'll see things happen. And then when there's a mass run, and people run, it causes chaos. It doesn't mean that you have to run, but it's just important to take care of yourself, know what you're getting into, whether you're in crypto, real estate, whatever the case may be.
That's awesome. Awesome. Thank you, AV.
Mhm.
And finally, I want to thank everyone who came on, all you guys. I'm going to put you back on. And I really, really, really appreciate everyone spending your time. It is Tuesday night, and you guys coming up, dropping these gems. I want to thank everyone in the chat. I want to thank everyone who has generously given to this panel. Thank you, thank you, thank you. But special thanks. It was a toss up. I mean, Friendsgiving was giving everything. She was giving them dudes for a run, but ultimately, El Guapo just was not going to be denied. Thank you, thank you, thank you. In fact, everyone hit the soundboard in a second, but then also Christopher Williams. Christopher Williams was hanging in there. So everyone, we're going to give a final salute. We're going to all hit our soundboard at the same time. Thank you, guys. Thank you for coming. And here's the thing, guys. I mean, this topic is a banking topic. I mean, it's not one of those, drop your draws and shake your whatever type of topic, And just to see the support, just to see, people in the chat willing to learn something and that's educational and it can potentially help them in their everyday life means a lot. And again, guys, to be so generous. I mean, I can't say, it's not much I can say, but let's give them that salute first. Salute everyone. And let's give them 1, 2, 3. Let's light up that soundboard.
Perfect.
All right. Oh! Thank you, guys. And we'll see you guys on the next one. Thanks.